Welcome to Siwale production. So today we're going to continue looking at the answers of accounts paper 2 of 2016. Specifically, we're going to look at question 2A and question 2B. So question 2A, Roman numeral 1 reads, mention any two types of ledger. So there are three types of ledgers. We have the sales ledger, purchases ledger, and the general ledger. So we're just going to mention any two. So the sales ledger, this is for customers' personal accounts. The purchases ledger, this is for suppliers' personal accounts. Then the general ledger, this contains the remaining double entry accounts, such as those relating to expenses, non-current assets, and capital. So I've said there are three types of ledger accounts, but for our question, they just need two. So we have the sales ledger, then we have the purchases ledger, and we also have the general ledger. And the question only says mention any two types of ledgers, so you can mention any two. Then Roman numeral 2 reads, list two classes of ledger accounts. So ledger accounts can be classified into real accounts, nominal accounts, and personal accounts. So these can be classified into real accounts, then nominal accounts, and personal accounts. So even for this question, you just mention any two types of accounts. So before we go any further, let us look at the definition of real accounts, personal accounts, and nominal accounts. So we know that there are two types of accounts, namely the personal accounts and the impersonal accounts. Impersonal accounts are subdivided into real and nominal accounts. So what are personal accounts? So personal accounts, these are debtors and creditors, which include suppliers and customers. Then what are impersonal accounts? So these are divided into real accounts and nominal accounts. Then real accounts are accounts in which possessions are recorded. Examples are buildings, machinery, fixtures, and inventory. Then for the nominal accounts are accounts in which expenses, income, and capital are recorded. So let us proceed looking at question B. So question B reads, Musaka was a customer for Chipo. From the following details, prepare Chipo's account in Musaka's ledger for the month of October 2013 and balance of the account at the end. So we have been given the year as 2013. So the first transaction which occurred, it occurred on the 1st of October. And it reads, balance due to Chipo 600 kwacha. Then on the 18th, Musaka bought goods with list price of 1,000 from Chipo less 20% cash discount. Then on the 17th, Musaka returned some of the goods bought on 18th October for 200 kwacha list price. Then on the 20th of October, Musaka paid Chipo the amount due on 1st October less 2.5% cash discount. Then on the 27th of October, Musaka bought goods from Chipo 300 kwacha net. So before we look at on how we can solve this question, it's very important for us to know the difference between a trade discount and a cash discount. So we can say that discount is an allowance provided to customers in specific circumstances. In business, there are two main types of discounts, namely trade discounts and cash discounts. While trade discount is the reduction in the list price of the account, whereas cash discount is offered by the firms to its customers to encourage early payments. The main difference between trade discount and cash discount is that a separate ledger account for discount allowed is opened in the books of the seller and discount received in the books of the buyer for a cash discount, but no such account is created in the case of trade discount. So that's the difference between cash discount and trade discount. So we are going to start by drawing Chipo's account for the month of October 2013, and we are going to write down our title there. So that's going to be our first thing. So the title is going to be Chipo's account for the month of October 2013. And we're going to draw our format there. So in the first column, we are going to have date, and the year there, it was 2013. Second column, we're going to have details. Third column, we're going to have folio. Then here we're going to have our debit and our currencies in kwacha. There we're going to have our credit and our currency there is in kwacha. So let us look at the transaction which was on 1st of October. So on the 1st of October, balance due to Chipo 600 kwacha. So the balance due to Chipo 600 kwacha. But let us go through the question again. Musaka was a customer for Chipo. So Musaka was a customer for Chipo there. So we know that Chipo there was the seller and Musaka was the buyer. So we can say this Musaka was the debtor and Chipo, we can say was the seller there. So from the following details, prepare Chipo's account in Musaka's ledger for the month of October 2013 and balance of the account at the end. So in when we are preparing Chipo's account in Musaka's ledger, so anything that Musaka is going to buy, we're going to record it as the purchases, and it's going to be recorded on the credit side of Chipo's account. Since the goods were going out of Chipo's account and we are going to Musaka's business. So our first transaction there on the 1st of October, it reads balance due to Chipo 600 kwacha. So this balance was not paid on 1st of October. That means it's going to be shown as a credit balance. So we are going to have a balance there. So we're going to call it balance brought down, and we're going to record our 600 on the credit side because that amount had not been paid yet. Then on the 18th of October, Musaka bought goods with list price of 100 with list price of 1,000 from cheapo less 20% cash discount. So before we record this one, we need to do our workings. So we can say our workings there. So Musaka bought goods with list price of 1,000 kwacha there. So the goods were going for 1,000 from cheap or less 20% cash discount. So we're going to say 20% of that, and that's 20 divided by 100. And if you punch that on the calculator, you're going to have a 200. So for us to find the amount there, we're going to say the original amount there, which was 1,000 there, we're going to say less 200, and we're going to have 800. So that is going to be the amount that we are going to record. So on the 18th, Musaka bought goods with list price of 1,000 kwacha from cheap or less 20% cash discount. So we're going to record that on the credit side. And we're going to call it as purchases. So our purchases there is going to be 800. Let us look at another transaction. Then on the 17th of October, Musaka retained some of the goods bought on 18th October for 200 kwacha list price. So here you need to take note of this word, 200 kwacha list price. So which means these the amount of goods were in this 1,000 kwacha. So which means we need to adjust that. So we need to find 20% of that, and that is what we're going to record in Chipo's account. So we're going to say 20 divided by 100 multiplied by a 200 there, and we're going to have a 40. And for us to find the amount of goods that we are retained, we are going to say 200 minus 40 there, and we're going to have 160. So 160 worth of goods were returned to Chipo. And since goods were returned to Chipo, which means we're going to record on the debit side, because Chipo is going to be receiving that amount of goods. So we can say on the 17th of October, and we're going to record that as purchases retains. As 160. Let's look at another transaction. So on the 20th of October, Musaka paid Chipo the amount due on 1st October less 2.5% cash discount. So Musaka paid Chipo the amount due on 1st October less 2.5% cash discount. So our first thing that we need to do is to find 2.5% of 600 kwacha. So that's going to be our first thing. So we can say can write here. So our first thing that we can say 2.5% of 600 kwacha. That's 15. The other way of writing this into a simpler form. So we're going to say 2 multiplied by 2, that's 4, then plus 1 there, we're going to have 5. Divide by, then we have a 2 here, and we know that that's a percentage. So we're going to have 5 here, divide by a 200 multiplied by 600. And if you punch that on the calculator, it's going to give you 15. So to find the amount that was paid there by Musaka, we're going to say 600 minus 15. So 600 minus 15, that's 585. So this amount was paid, and it was not specified whether it was paid by cash or bank, so you can record that either bank or cash. Then we must know that since Musaka paid this amount, which means there's a remaining balance of 15 there. There's a remaining balance of 15, and for us to write off that balance of 15 from the credit side, we are going to debit Chipo's account with discount received. So we're going to record our discount received there. So this represents discount received, not debit. So this represents discount received, and we're going to debit discount received with 15, so that we write off the 15 that is remaining from the credit side. So let us record those transactions. So on the 20th of October, there we're going to say cash, and the amount that was paid was 585. And since the amount was paid to the business, that means that Chipo was receiving. Then on the same date, 20th of October, we're going to say discount received. Discount received there, we're going to record it on the debit side as 15, so that we can balance off that, so that we can have 585 plus 15, and that's 600, and that means going to cancel out with this balance brought down that was on the 1st of October. Then let us look at another transaction. On the 27th of October, Musaka bought goods from Chipo 300 kwacha net. On the 27th of October, Musaka bought goods from Chipo 300 kwacha net. So we're going to record that as our purchases. And since Chipo sold the goods, that means that the goods were going out of the business, and that amounted to 300 kwacha. So from there we can find our total. And on the 31st of October there, we can say our balance carried down. And on the 1st of November, we can say our balance brought down. Our balance brought down. So there, to find our total, we're going to add the debit side and the credit side, and the amount that is going to give us a higher amount, we're going to put it as a total on both the debit side and credit side. And there you're going to discover that the credit side is going to be more, and it's going to be 1,700. So we're going to record our 1,700 there on both the credit side and the debit side. So if you say 1,700 minus, after adding 160, 585 and 15 there, we're going to have our 940 as our balance carried down. Then the balance brought down on the 1st of November there is going to be 940. So that's how you can write the cheapos account for the month of October of 2013. So where you have questions, you can put them in the comment sections. And if you want the full topics videos, I'm selling full topics videos at 30 kwacha per video. Or if you want to join our online tuitions, you can join our online tuitions at 100 kwacha per subject. Or if you want past papers with answers, we sell some past papers with answers. So for more information, you can call me or text me on WhatsApp on 1973 02 36 20. I'll meet you next time. God bless. Peace.